economy's backbone is composed of banks. So what if I told you that any bank has the authority to create money? You could theoretically open a bank and begin making money, but there is a simpler approach. Why would you spend so much money to start a bank when you can create your own cryptocurrency and become a crypto billionaire? At least that's how things have been lately. If you think cryptocurrencies are a fraud, you probably don't know anything about the banking system. So in this video, we're going to look at 5 truths about money that banks don't want you to know, because if everyone knew about them, the banking system would collapse. Henry Ford once stated, "It's well enough that people of the nation do not understand our banking and monitoring system, for I believe there would be a revolution before tomorrow morning." If you're ready, give this video a thumbs up and subscribe to our channel. Number 1. Keeping your money in the bank is a scam. Let me ask you a question. How much interest would you earn if you deposit your savings in a bank? At first glance, it seems like at least a few percent for it to make any sense, right? However, if you look at the numbers, that's far from that. The top banks such as Citibank, for example, they offer literally less than 0.5%. There are banks that offer a higher rate, but they're still less than 1%, especially since interest rates are at the bottom now. Think about it. Your money grows by 0.5% while inflation is 2.5%. Every year, the intrinsic value of your wealth depreciates. You'd be better off spending that money now rather than saving it for later. In a few years, your money will have considerably less purchasing power than it has now. When inflation is high, as it is right now, asset prices such as homes and stocks grow dramatically, as we've witnessed in the last 12 months or so. A bank is only a place to park your money and not to make money. Number 2. Every bank has the right to create money out of thin air. If I told you that banks produce money, you wouldn't believe me, because the Federal Reserve is the only bank allowed to do so. It is the only institution with a privilege to use the printing machine and is the source of the dollar. The banking system, on the other hand, is set up in such a manner that every bank in the country, and indeed in the world, is permitted to generate money to a certain extent depending on the amount of money deposited in that bank. Let's say you put $1,000 in a bank account. What do you believe that the bank will do with your money? It is pointless to just keep it. They wouldn't be able to afford to pay you your miserable 0.5%. So the bank takes your money and lends it to someone else who wants to purchase a car or a property, earning interest that is often much larger than the 0.5% it gives you. The average credit card interest rate is 20%. That's hundreds of times more than the bank will give you. The point is that the bank will not inform you as to whom your money will be lent. When you check your account, the bank will show you that your money is still in the bank and that you can withdraw it at any time. So if your money is still in the bank, then where did the bank go to lend it to someone else? This is referred to as fractional reserve banking. Banks are permitted to keep 10% of deposits and lend the rest. The bank creates another $900 and lends it to someone else for every $1,000 you put, bringing the total amount to $1,900. So in conclusion, the bank created $900 from thin air. Because they're only figures in the computer, it's not as difficult as you might imagine. Number 3. You can make money by borrowing money from banks and investing it elsewhere. Mark Zuckerberg took out a 30-year mortgage in July 2012 to finance his $6 million Palo Alto home, which is 3 miles from Facebook's headquarters. He was 28 years old and the world's 40th wealthiest person at the time, with a net worth of $15.6 billion. Why would you get into debt when you have billions of cash and can easily pay them off? Well, he could easily buy a dozen $6 million homes in cash without blinking an eye if he desired. So what's the point of getting a mortgage? The answer is that it's free cash. Sounds unbelievable, right? When you're already a billionaire, who would give you free money? Unless it's for charity, why would somebody give someone else free money? Well, it's all about interest rates. Remember how banks offer such a low return on investment that it's not worth keeping your money there since it doesn't even beat inflation, so you're losing money? In this case though, the situation is reversed. Because the inflation rate in the United States is between 2.5 and 3%, any money you may borrow that is less than that rate is termed free money. Because Zuckerberg's mortgage rate was little over 1%, the banks are the losers if you do the math. Let's pretend you borrow $1 million at 1% interest rate for the sake of example. Before the pandemic, the average rate of return on a savings account was 2.4%, but now it is currently less than 1%. But let's just say it's still 2.4%, which means that if you deposit that $1 million in another bank, you will earn $24,000 each year while only paying $10,500 per month to the bank that you lent the money. Consider what you could do with $100 million, or perhaps $1 billion. When you can borrow money for nothing, there's no sense in tying up your own cash when you could be spending it on something more beneficial. Of course, when dealing with small sums of money, this may not make sense because the difference isn't significant. However, when it comes to large sums, playing around with 1, 2, or 0.5% could potentially mean dozens of thousands of dollars, if not hundreds. Number 4. The richer you are, the lower the rates you get. Banks aren't charitable organizations, they're businesses, just like any other, whose goal is to make the most money possible. They have shareholders to whom they must account, and if their business strategy isn't successful, they won't be able to stay in business. That's why they'd rather lend money to a wealthy individual rather than a poor individual. When you're a billionaire, for example, the banks can rest easy knowing that no one is concerned about you defaulting on your own loan. In the event that something unexpected occurs and you are unable to make your monthly payments, you can easily sell a portion of your firm to repay your mortgage. As a result, lending your money is essentially risk-free. In fact, throughout the ages, the banking system evolved to the point where banks would only engage with people who had money and assets that generated revenue on a consistent basis, such as land. When compared to the average employee who may become ill, be unable to work, or just lose his job, it's incredibly dangerous to lend money to you if you're barely scraping by. I know it's easy to blame banks for this, but consider this. Which would you feel more comfortable lending money to? A friend who makes very little money or a friend who owns a business? Probably the latter, as harsh as that may sound. If you want a lower mortgage rate, a lower credit card rate, or simply better borrowing terms, you must first improve your financial situation. Banks also offer a low mortgage rate to establish a strong relationship with rich people. That's so in the event that they would need a bigger loan for their business, they would come to them. It's a win-win situation. Technologies such as blockchain or cryptocurrencies are promising to change that and democratize banking. And they probably will, to a certain extent. In fact, banking has been democratized to the point where everyone has access to financial services. Compare that to 100 years ago. Number 5. Credit cards are banks' nuclear weapons. 70% of Americans with credit card debt admit that they can't pay it off this year. Ponder for a moment about what that means. Your credit card debt isn't like a mortgage. It isn't 3.5% a year. It's probably like 20%. If you can't pay your credit card debt on time now, what makes you think that you can pay it in a few months or even later when the debt has grown much bigger? In other words, 70% of Americans are about to fall into the debt trap. Over half of those surveyed, 56%, say that they've had a credit card for at least a year and will most likely to continue to carry it for years to come. Almost 20% estimate that it will take them more than 3 years to pay off their debt. But roughly 8% say that they don't know when they will be able to pay it down. That's how banks usually make fortunes, because most people spend without thinking about how they will pay it back. They've been accustomed to a certain standard of living and they're ready to keep it, even if they can't afford it. That's why banks keep calling you to sell you a brand new credit card. Don't get me wrong, using credit cards responsibly is great to build your credit score, but if you're not financially responsible, then you shouldn't get yourself into that debt trap. If you like this video, give it a thumbs up and make sure to subscribe. Thanks for watching, and until next time.